Good morning, students. Good morning.
Please start, sir.
We are starting with accounts of banking company. We will wait for just 2 minutes for the remaining students to join. Accounts of banking company. Yes, guys. Accounts of banking company. The members who are present, you are requested to share your list of doubts. It will be a quick revision of the entire chapter. We will try to solve each and every question from your CMA module. Here we start. Good morning, and do confirm that the voice is clear. The voice is clear. The video is visible. Revert back to my response of good morning. Here we begin. Guys, here we begin with banking company accounts. Page number 270 of your module. 270 of your module. Confirm that the screen is visible. Please confirm that you are able to see the page accounts of banking, electricity and insurance companies. This page is visible to you. Please confirm. Starting with the topic. Guys, topic is accounts of banking companies. Here we divide P&L account and balance sheet into schedules. P&L account, balance sheet, we divide into schedules. The balance sheet is schedule 1 to 12. The P&L account is schedule 13 to 16. Whatever I will teach, you have to revise it. P&L account 13 to 16, balance sheet 1 to 12. Let's draw the balance sheet using imaginary figures. So the name of the bank is ABC Bank Limited. Balance sheet as at. In practical real life, you have to make balance sheet current year and previous year for comparison, 2 years balance sheet. But in the classroom and in the examination, you will get balance sheet for 1 year. So balance sheet as at 31st of March 2023. So we start with the balance sheet. In brief, the first side is capital and liabilities. And we are having total 5 schedules here. Schedule 1, Schedule 2, Schedule 3, Schedule 4, Schedule 5, and this is the total of the capital plus liability side amounts. So Schedule 1 to 5, let's remember Schedule 1 to 5. Schedule 1 is share capital. You call it capital. Schedule 2 is reserve and surplus. 3 is deposits. 4th is borrowings. 5th is other liabilities and provisions. Remember it fast. Balance sheet, liability side, vertical format. As per the Banking Regulation Act, we are talking about balance sheet. We have started with accounts of banking company. Good morning, everyone. Do respond. It's important always. Good morning, everyone. You must have done banking even before this, so you must be having a good clarity of the chapter. So we have started with accounts of banking company, and in balance sheet we are having schedule 1 to 12. In P&L account we are having schedule 13 to 16. Then we started with example. The name of the bank, let's take it ABC Bank Limited. In real life, you have to make balance sheet for current year as well as previous year figures. For comparison, we are making balance sheet only for the current year. Balance sheet, first of all, liability sides. That is, this is particulars. This is schedule number. This is amount, current year. In real life, we have to make for the previous year as well. It is a vertical form. Balance sheet is in vertical form. First of all, capital and liabilities side, capital, reserve, surplus, deposits, borrowings, other liabilities and provisions 1 to 5. Let's match the answer with your institute. So, capital and liability side, capital, reserve, surplus, deposits, borrowings, other liabilities and provisions. Good luck. We'll be doing it very slow. Good morning again. We'll be doing it very slow. Do ask your doubts. 1 point over. We go to the next point. We continue towards the asset side. We continue. We will say assets. The schedules are 6, 7, 8, 9, 10, 11 and total. So 5 schedules for the liabilities means capital and liabilities. 6 schedules for the asset. This is cash in hand and balance with RBI. The name is very clear. Balance with other banks. Money at call. We'll discuss the terms. And short notice. This is schedule number 7. Schedule number 7. Investments. Deposits. Advances. Fixed assets. other assets. Remember these 6 names for the asset side. Revise it quickly. Revise it quickly. Revise it. Quickly revise it. All done. Very well. We move further. C cash and balance with RBI, money with other banks, call money at call and short notice, investment advances, fixed assets, other assets. So we have done 11 schedules. Now the next is 12, that is contingent liabilities. So this is bills, contingent liabilities and bills for collection. Contingent liabilities, will discuss each and every term, and bills for collection. What are these? We'll discuss. This is a note in the balance sheet, but it is schedule number 12. This is a format of the balance sheet. Next. Now we'll be going to statement of profit and loss account. I mean to say profit and loss account for the year ending. We will divide this into parts. We'll divide it into 4 parts. First part is income. Income can be, see here, very smart students. Income can be from balance with RBI. Income can be from balance with other banks, money at call and short notice. Income can be from investments. Income can be from advances. These assets will give us income. We will call it interest earned. We will call it interest earned. And other incomes, for example, locker rent, sale of asset, we'll call it other incomes. This is schedule number 13, schedule number 14. Now, income is to be compared with the expenditure. Income is to be compared with the expenditure. Interest expended. Expended means paid. Operating expenses and expenses for which we provide for provision for the third expenses, provisions and contingencies. These are 3 expenses. Schedule is 15, 16 and none. So total 16 schedules. Now when you will compare income versus, let's match the answer till now. So interest earned, other income, schedule 13 and 14, interest expended 15, operating expenses 16, provisions and contingencies. Okay, next. Now the third part of P&L account is profit or loss. So you will say profit for the year. Profit means profit or loss for the year. Profit and loss balance brought forward. It doesn't have any schedule, just the amount. And now the fourth part is appropriations. Appropriation, for example, transfer to statutory reserve. Transfer to other reserves. Proposed dividend. Balance carry down. We will talk about these items in the time to come today itself. If you have revised the matter, you can always ask your doubts. Good morning again, all members. You must be knowing very good things about banking company. Get all your doubts clarified today. Theoretically, we have done the matter. Let's start with practical part of it. Let's start with the practical part of it. I will tell some beautiful things. The things will become very clear. You must read the question to understand the answer. Read the question. There is a loan of 2 lakh. It has become non-performing asset. We will discuss about non-performing asset. Interest earned, not received. Interest earned but not received is 20,000. Full stop. Next year, full stop. Next year, 75% could be recovered. 25% bad debts. Let's do the accounting. Let's do the accounting. RBI says interest of non-performing asset should be considered as income on receipt basis. Interest of non-performing assets should be considered as income on receipt basis and not on accrual basis. So on 31st of March 2021, 31st March, you will make merchant the debtor, but the interest income you cannot call it income. So you have created interest suspense account as a liability. Merchant debit and interest suspense credit by 20,000. Next year is 2021-22. 21-22. Please understand 75% could be recovered. So interest suspense, debit, interest will be recognized as income because this year the interest will be received, or do one thing. First of all, receive the interest. First of all, receive the interest. Then we'll talk about it later. Let's make only one entry, right? We will recover 2 lakh of principal plus 20,000 of interest to 20. We will be recovering 65%, 1,65,000. 1,65,000. Principal amount, the bad debts will be 2 lakh 25% bad debts. So the bad debts will be 50,000. 50,000. The merchant's account will be closed. Merchant like Vijay Mallya, 2 lakhs plus 20,000. 2,20,000. And interest suspense will never be income for 5,000 because the income is to the extent of 75%, it will be reversed. So this is one entry. Doing so, the merchant account will get closed and all beautiful things done. Now, remaining interest suspense 15,000 will be income. Interest suspense to interest 15,000. Beautiful concept. Let's move further. Varinder ji, see the recording for repetition. If I will repeat every topic, schedule 1 to 16. Anyway, I will repeat if you are requesting so. Schedule 1 to 5 liability side, capital and liabilities, capital, reserve, surplus, deposit, borrowings, other liabilities and provisions. 6 to 11 assets, cash in hand, balance with RBI, balance with other banks, money at call, short notice, investments, advances, fixed assets, other assets. Schedule 12 is contingent liabilities and bill for collection. And P&L performer is smaller and easy. We have done one question beautifully. And of course, this interest income will go to P&L account. This interest income will go to P&L account, need not to say. Next question, after making entries, you can make the ledger of that merchant. You can make ledger of interest suspense. Looking at the entries. Now, next point. I give you a minute to revise this topic. You must read the question before I start saying anything about it. Acceptances, endorsements, and other obligations. Acceptances, endorsements, and other obligations is a contingent liability. This is a contingent liability. Contingent liability. And earlier, 18 years back, we used to record contingent liability in the books. Now we don't record contingent liability. Let's read the question well. At the beginning of the year, this was the amount outstanding. 30 lakhs were paid by the clients and balance was paid. Balance means 3,45,000. And the other things are as follows. Other things are as follows. Bank honored, party paid, party failed to pay, bank had to honor, and pending. I will tell you the beautiful way of presenting the answer, the most beautiful way. Acceptances, endorsements, and other obligations. This is a contingent liability. This is a contingent liability. Total amount is opening balance 33,45,000 plus during the year is 64,05. $97.50. Now there are four possibilities. The first possibility is a customer paid the amount. Customer paid the amount. Contingent liability, when the customer will pay the liability will be no more contingent. Uncertain nahi hai, it has become certain. Second is bank paid the amount. Now it is not contingent. Third is bank have to pay the amount. Customer refused, bank have to pay. ठीक है, customer refused, bank have to pay. Bank paid and bank have to pay. Still now the liability is not contingent, it is confirmed. And now this is a balance pending status carried out. Now the question says customer has paid 30 lakhs, customer paid 18 lakhs, 30 plus 18, 48 lakhs. 48 lakhs customer paid. Customer paid 48 lakhs. Have you listened? Customer paid 48 lakhs. Customer paid 48 lakhs. Bank paid 3,45,000 and bank paid off. Bank honored 15 lakhs. 15 plus 3, 18 lakhs 45,000. 18 lakh 45,000. Bank had to pay. Customer failed to pay and bank had to pay 7 lakh 50,000. Don't say to repeat the things. You can see the recording later. 12, 7.5, 23, 55. Now status is pending. Contingency is still there. $97.50. The grand total is $97.50. Now, notional entry. Notional entry in memorandum books, rough books. Notional entry in memorandum book says to create a liability, acceptances, endorsements, and other obligations. And if you create a liability, you have the right to recover from the customer constituents. Constituent means customer here. Constituents liability. It's not our liability, it's the liability of the customer. Constituents liability for acceptances, endorsements, and other obligations. So debit versus credit. The message is loud and clear. Now the question says prepare which account? The question says prepare only one account. Question is asking for one account. We'll make one account, otherwise we can make two accounts. Good morning again. I will not be putting the dates, acceptance, endorsements, other obligations. I will say by balance brought down, it is a liability. It is a contingent liability, a footnote, but this is in memorandum books. Then during the year, constituents liability for acceptances, endorsements, and other obligations. Starting liability was 33 lakhs 45,000. During the year, further contingent liabilities were this much. Now the balance contingent liabilities are 2355. Balance liabilities are not contingent to reverse entry. These will be cancelled. Constituents liability. Constituents liability for acceptances, endorsements, and other obligations. Now customer has paid, bank has paid, or bank have to pay me same. It is no more contingent. It will be reversed. So the reversed amount will be 48 lakhs. Eighteen 45 750. 94 lakhs 97 lakhs 50,000. Dates are very comfortable. You can use yourself, and even you get full marks. Sometimes you don't mention the dates. Continuing further, we have done illustration 1, we have done illustration 2. It's the same answer. Now the next question is rebate on bill discounted. Class 11, you must be remembering, you get your BOE. You used to get your BOE discounted with the bank. It will become income for the bank. It will become income for the bank. It will become income for the bank. Income can be earned income. So discounts received is income for the bank. And earned income is income. Unearned income is a liability. Do you remember? Earned income is income. Unearned income is a liability. Earned income is a income. Unearned income is a liability. Now the maturity date of the bill will be this plus 5 months plus 3 days of grace. The maturity date will be 15 will become 18th of October, November, December, January, February, March 2022. This is the maturity date. 4 months, 13 of March. 4 months, 28th of March. 3 months, 23rd of March. Is it fine to all? Yes, it is fine to all. Now the year ending for the bank is December. So year ending is December and the bank has earned the interest of. The bank has earned the interest. So bank has earned the interest. Now is it interest earned or unearned? Let me tell you. 1st January onwards, the interest income is unearned. On this bill discounted, the bank has earned the money, but this has not expired. So don't call it interest earned, call it interest unearned from January till the maturity date. The interest for the remaining days of October, November, December are earned. Interest for the period January, February and 18 March is not earned. So the interest not earned. Interest not earned. This is on this transaction, the interest not earned will be January, leap year being leap year, it's not a leap year, February and March. Number of days. Here the number of days will be January, February and March. Here the number of days will be January, February and March. Here the number of days will be January, February, March. So number of days are 31 plus 28 plus 18. Number of days are 77. Number of days are 72. Number of days are 82. So this much interest is not earned. 50,000 is the amount. 30,000 is the amount. 40,000 and 60,000. There are 365 days a year. And interest is not earned for the days 77, for the days 72, for the days 87, for the days 82 into how much rate of interest? 8779. 8% per annum, 7% per annum, 7% per annum, 9% per annum. This whole answer will be unearned discount, unearned. Unearned discount is also called rebate on bill discounted, rebate on bill discounted. It's a quick revision, guys. You must have done the chapter earlier too. Good luck. So they say the number of days will be now why they are taking February as 29. Now they need to amend February. Has the question mentioned? Take it as a leap year. Question has not mentioned. It's not a leap year. What is happening? What is happening, guys? What is happening? Please amend the answer. Make it 29 Feb as 28 Feb. Reduce one day. Its answer is going to be beautiful, highly beautiful. So the amount answer will differ. Amount will not be 3169. No, it's not right. Please note down the correction. Good morning all again. Do keep responding, performing. Do ask your doubts. Today's lecture is only banking company accounts. Having great hopes and expectation from you all. Vrinder, any doubts? Let me please do the calculation 50,000. Please do the calculation 50,000 into 8% into 77 divided by 365 memory plus 30,000 into 7% into 72 divided by 365 memory plus 3139 round off. 3139. Answer is 3139 rounded off. So unearned income. So you will debit discount. You will reduce the income and you will create a liability. The name of the liability is rebate for bill discounted. 3139. Make correction in your book, guys. Another question on rebate on bill discounted. We have promised we'll do total chapter means total chapter. You must read the question. You must read the question. Only thereafter we can further continue. Please read the question. I will read it too. The opening rebate is 18 crores. Very comfortable. Very comfortable. So the income earned is discounts for the current year are 8,000 in crores, 8,000 into 18% per annum and average period. Some bills are for 1 month, 2 months, 3 months. The average period is 73 days. It is 288 crores. And unexpired discount is 21.6 crores. Brought down is 18 crores. And that means instead of entry, if I make the ledger directly to make you things beautifully understand, rebate on bill discounted, which is a liability of 18 crores, answer in crores. FIFO, first in, first out. The last year unexpired discount will expire this in the current year. It will become income. Discount received account. It will become income. Closing unexpired discount will be created out of discount received account. And it will be carried down as a liability. Carried down means next year will be brought down. Now you say discount received income. Discount received as income, earned income. Current year you have received discount from the customers. The amount was 288 in crores. Plus last year unexpired income becomes income. Rebate on bills discounted 18. Now the unexpired discount at the end is rebate on bill discounted, rebate on bills discounted 21.6. Remaining is earned income, which will go to P&L account. The earned income is 18 plus 288 minus 21.6, 284.4. I have made direct ledger. Journal entry you will make yourself. Journal entry you will make yourself. Amount has to be correct, 284.4, which will be transferred to P&L account. It's beautiful. Good morning again. Next question. We are doing banking company accounts. Now, secured loan, unsecured loan. The loan is 5 lakhs. The loan is 5 lakhs. The security value is 7,000 shares and today's rate is 80. Forget about 90. Today's rate is 80. So 7,000 into 80 is 5,60,000. The security is 5,60,000 and loan is 5 lakh. So you will say the loan is fully secured. Answer is you will classify the loan as secured 5 lakhs principal. 5 lakhs principal. Now you talk about interest. Wait. Now we talk about interest. Continue. On 5 lakhs, the rate of interest will be 16%. 16% per annum means 4% per quarter. So add 4%, add another 4%. They never add 16% straight. Not simple method of interest, compound method of interest. Plus 4% plus 4%. Don't add direct 16%. No. 5 lakhs plus 4% plus 4% plus 4% plus 4%. The amount is 5,84,929. 5,84,000. You are having additional security of 60,000. So interest out of 84,929, 60,000 interest will be secured and remaining 24,929 interest will be unsecured. How they have made the calculation, is the calculation right or wrong? Let's verify. We can verify. Errors can be removed. Now, how interest is 1,08,000? How? Understand the beauty. Oh, the period is 15 months. Guys, the period is 15 months. Okay, we took it 12 months. Please continue. 584,929 plus another 4%, 15 months, 5 quarters. Amount is 608,326 minus principal amount. The interest is 108,326. 60,000 interest will be secured. Remaining 48,326 will be unsecured. Absolutely correct answer. Next question is illustration number 6. You have the right to ask your doubts, guys. Guys, ask your doubts. Read the question. Please confirm, am I audible? Respond and reply and tell me, am I audible? Chaliye, tell me the answer. These are performing assets. These are non-performing assets. Performing assets, the interest will be taken on earned basis. On non-performing assets, interest will be taken on received basis. So please make total of 240 plus 1,500 plus 300 plus 10 plus 24 plus 40. I will not speak anything unless you tell me the answer. You must contribute, my dear friends. Tell me the answer, only that, then I will go ahead. I will be waiting for your response. I am waiting for your response. Your reply now. 20. Yeah, you have done, my dear friends, you have done class 11. Insurance, prepaid insurance. The prepaid insurance means which will expire in the next year. Means it has not yet expired. Not yet expired. Unearned. Accrual basis, for example. Don't say so, you don't know what is unearned. Answer is 2114. Answer is 240 plus 1500 plus 300 plus 10 plus 24 plus 40, 2114. We are doing each and every question. Read the question. Now you have to make provision for doubtful debts. You have to make provision for doubtful debts. Here will be the answer. You have to make provision for doubtful debts. Performing assets, the provision is 0.4%. Substandard asset, assuming secured, assuming secured, assuming secured. Uh, Doubtful debts, substandard perform, standard performing, substandard, the provision is 15%. Doubtful up to 1 year, the provision is 25%. Doubtful more than 1 year, up to 3 years, the provision is 40%. Doubtful for more than 3 years, because the provision is 100%. And loss assets, the provision for doubtful debts is 100%. So same is the answer what ICI says, your ICMAI says. So the answer will be 6,000 into 0.4, 24, 4,400 into 15%, 660, 450, 800, 600, 1,600. Answer is 4134. Provision for doubtful debts. So 4134 is the provision for doubtful debts. The answer is correct. The answer is correct. Next point. Another question of same category. Another question of similar category. Here is the answer. Well done. Now you have to calculate the provisions. The total amount is 70, 90, 100, 120, 120. Now you have to create a provision for doubtful debts. Advance fully secured. Advance fully secured. And this advance, these are advances for how much period? In the a certain amount of provision to be made against advance. So advance fully secured. Advance overdue for more than 15 months. In normal case, the provision is 0.4%. Advance overdue for 15 months. More than 15 months, it will become doubtful. The provision will be 15%. Doubtful? No, the provision will become 25%. Overdue. I will tell you the story later. What is the story about it? Out of 10 lakh, 5 lakh is secured, 5 lakh is unsecured. It is overdue more than 2.5 years to 3 years. It will be doubtful for more than 1 year up to 3 years. The provision on 5 lakhs will be 40%, or the provision on remaining 5 lakhs will be 100%. And irrecoverable means loss assets. Let's verify the answer. Answer will be in lakhs. 70 into 0.4, it is 0.28 in lakhs. 25% is 5. 5 into 40% is 2. 5 into 100% is 5. 20 is 20. 20, 25, 30, 32, 32.28. We will recheck the total. 30.28, and we said 32.28. Let's find the difference. It shouldn't be. Now, they call it substandard. We are saying it's doubtful up to 1 year. That is the confusion. Let's understand. This is overdue for more than 15 months. Yeah, for 15 months. It was for 15 months. It's the right answer. Now, any advances up to 90 days. 90 days, you can take it as good as 3 months. As good as 3 months. They are called performing assets. Beyond that, on 91st day, these are called non-performing assets. Next 1 year, they will be called non-performing category 1 substandard asset. So 3 months plus 1 year, it is substandard. 3 months of performing and 1 year of non-performing. Up to 15 months, it will, if any loans are overdue for 15 months, they are substandard. Beyond that, they will become doubtful. All well. Ninth question, guys. Next, guys. Now the loan is, this is as good as question 1. This is as good as question 2. The advances are 35 lakhs, secured are 40 lakhs, unsecured are 60 lakhs, 60%, secured are 40%. The value of the security is 15 lakh. the realizable value. This is irrelevant. This is irrelevant. This is irrelevant. And you have to tell how much provision is required to be made. You have to tell how much provision is required to be made. Let me show you. I will save your time. The loan is 35 lakhs. Security is 10 lakhs. Unsecured is 25 lakhs. In unsecured, the cover is 40%. That is 10 lakhs. Unsecured and uncovered by the government security. Okay? So this is all government credit. CGC stands for Credit Guarantee Corporation. Credit Guarantee Corporation, CGC. So the provision required is 10 lakh secured, 15 lakh unsecured, and we are talking about which kind of 15, 21. These are doubtful for more than 3 years. These are doubtful for more than 3 years. Doubtful for more than 3 years. Doubtful for more than 3 years. So you will, for secured, you will create provision of 100%. For unsecured, you will create provision of 100%. Answer is 25 lakhs. Answer is 25 lakhs. Yes. Same ditto copy, cut, copy, paste. Second answer is again same. Another one question of the same kind. The loan is 90 lakhs. Securities are 22.5. Unsecured are 67.5. CGC cover is 50%, 33.75. Remaining unsecured, and these are doubtful for more than 3 years. If they are doubtful for more than 3 years, then secured or unsecured, the provision will be 100%. The provision will be 100%. 56.25 answer. 56.25 answer. See the beauty. Now you have to give answer to this question. Guys, how much provision you will create? On standard assets, you will create provision of 0.4%. On substandard asset, 15%. Doubtful up to 1 year, 25%. 1 to 3 years, 40%. And 100%. So the answer will be 4,500. Answer in lakhs. 4,500 into 0.4. 3,300 into 15%. One, 3, 5, 600. So guys, the answer is 2,800.5. Guys, the next question. Guys, we are doing each and every question. You must ask your doubts. Start asking your doubts. Next 5 minutes are doubt solving session, guys. Waiting to know your doubts from banking company accounts. You must have done this chapter 1-2 times earlier. Tell me your doubts. Your doubts, please. Your doubts, please. Now, guys, listen carefully. Look here. Let's number provision and contingencies as PC. Let's say provisions and contingencies as PC, just as a short point. Now listen beautifully. Interest and discounts, schedule 13. Interest paid, schedule 15. Commission, exchange and brokerage, income under schedule 14. Rent under schedule 14, other incomes 14, 15, 15, 15, sorry, 16 I have to say. Not 15, operating expenses are 16, as you know, 16. Provision for doubtful debts, PC. Rebate on bill discounted, you will reduce it from the income. Rebate on bill discounted, unexpired income, unexpired. Provision for income tax, PC. Provisions and contingencies. And the dividend is going to be 10%, and 10% of dividend and transfer to statutory reserve is 3,50,000. 3,50,000. And the dividend is 50,000. I will like to say I will not make schedule again 13, 14, 15, 16 PC. So discounts and interest 13, it will go 20,30,000 minus 7,500. This will go 22,500. Other incomes is 90, 30, 120, 120, 215, 215. So total 22,37,500. It is a rough answer. I will show you the fair answer. 22,37,500. Now interest expended is 12,02,500. 16 is 1,05,000. 12,000. 54, 12. 25. 12. 4. 2,36,500. And provisions and contingencies will be 2 lakh plus 350, 550. $19,88,500. Now net profit for the year will be income minus expenses. This is 2,49,000. Last year brought forward income is nil. 2,49,000. Let's match the answer to 2,49,000 is beautiful. Now next is transfer to statutory reserve and 50,000 as proposed dividend and balance carried down. Easy form. Now you have to make the balance sheet. Now you have to make the balance sheet. Let's make it. Guys, are you ready? Are you ready? Cash credit, bank overdraft. These are liabilities for the customer of the bank, but these are advances for the bank. Asset. Schedule 9. Cash in hand 6. Reserve bank 6. Other bank 7. 7. Gold is gold investments 8. Government securities 8. Current account debit balance. Current account debit balance. No. Debit balance. Bank overdraft liability credit for the customer debit 9. Premises 10. Fixed assets. Term loan dena advances 9. Share capital 1. Statutory reserve 2. Net profit 2. Profit balance 2. Deposits 3. Payables 5. Borrowings 4. Now you have to remember the pro forma of banking company balance sheet. Bills for collection 12. Acceptances, endorsements 12. Contingent liabilities and bills for collection 12. Depreciation charged. Depreciation already charged हो चुकी है. So these are already reduced. These two assets are already reduced. Either you add it first and then show it as less. First you add it and show it as less or ignore it. Better answer is first one. First add and then show it as less. Let's make answer. You will be enjoying it. Schedule 1, 2, 3, 4, 5. Beautiful. 1 is 297. 2 is 346.5. 225. 618. 3 is 775.5. 475. 675. 780. 2230.16. 165. 0.5. 15. So this plus 165 plus 0.15 plus 1189.5 plus 297. Totaling will check again 3882.3. See if anybody don't know the performer of the balance sheet will say the question is difficult. Absolutely fine. The liability side is absolutely fine. Now the asset side 6, 7, 8, 9, 10, 11. Waiting for your doubts, guys. Guys, waiting for your doubts. You don't ask any doubt. You are so good. You must ask your doubts. It's a good habit. Now, schedule 6 to 40.33, 308.15, 308.159, 240.23 plus 67.82, 05. Schedule 7 is 132.81 plus 315.18, 447.99. Schedule 7. Schedule 7. Why there is a totaling error? Guys, why? Why? 132.81, 132.81 plus 315.81. It is 4. Again, I am doing it 132.81 plus 315.81.18, sorry. 447.99. Why answer is wrong here? Guys, answer is wrong here. Why answer is wrong? Let's check up. Acha, there was a current account. There was a current account. Current account. Here, current account is 9. Current account is not 7. Make the correction in your book. Balance in current account is 9. OD. 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 It is liability for the customer and asset for the bank under schedule 9, not 7. Wrong. 8. 82.84 plus 365.25. 448. Nine is 2449.47. The answer of institute is wrong. 10 is 228.73. 11 is 'make the correction in 7 and 9. Now 12. 12 is, this answer is in lakhs. In lakhs. In lakhs. In lakhs. 18.1, 14.12, 0.55. In lakhs, it is 32.77. Schedule 12. Schedule 12. Contingent liabilities and bills for collection. Schedule 12 is contingent liabilities and show bills for collection separately. That is a better answer. Truth. Correct. 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 Bill for collection show separately and contingent liability show separately. It is a better answer. 14.67. Correct. Guys, we have done each and every question of the module. Each and every question. Now, next 6 minutes is your doubt solving session. We have done each and every question, each and every question, each and every question. Now you ask your doubts. Ask your doubts. Ask your doubts. Guys, the next topic is financial statements. No doubts being asked. Financial statements of companies. Financial statements of companies. Financial statements of companies. Companies which follow AS, ठीक है, will need to adopt division 1, need adopt division 1. Companies which follow Ind AS need to adopt division 2. We start with division 1. We start with division 1. We are talking about Schedule 3. Part 1 is balance sheet. Part 2 is statement of profit and loss. Let's start with the question. You get 3 minutes to read the question. You get 3 minutes to read the question, guys. It's a full-fledged question. We will take 20-25 minutes to solve this. Full-fledged question. Hello, guys.